In this video, I'm going to be sitting down with Yuya Kato, a 15-time funded professional prop trader that's going to be explaining one of the most fundamental concepts in trading, but a lot of people really get this wrong. So in this video, make sure you pay close attention because what he's going to teach you is going to help you identify where the best place to take trades are, where a good place to exit trades are, and where good places to put your stop losses are. So Yuya, why don't you go ahead and share really quickly the fundamentals here behind zones and ranges, what that actually means and why it's so important and why people may get this wrong and how they should think about this.
So yeah, thank you for having me. What I'm going to explain today are a very, simple concept, right? A way I like to trade is I like to think of two things, right? When I'm trading, these two concepts of zones and ranges, right? You might ask, what are zones and ranges? So zones and ranges are very simple. To me, how I identify a zone equals a supply or demand level. And if you don't know what supply and demand level is, I definitely will, go more in depth on explaining what each level is, and you might get a better understanding of it once I start explaining all these things right now, right? You want to figure out your zones, right? So when you figure out your zone, it's either a supply or demand level. Let's kind of take this right here. We have a level of supply right here. So we have a level of supply, we have a level of demand. And in simple terms, what basically supply and demand literally means is a supply is basically our resistance, our demand is basically our support. At a supply level, there's a lot of sellers. At demand levels, there's a lot of buyers. What we do is first we want to identify our supply and demand. Once we've identified supply and demand, now we have to figure out the range. And what the range is essentially is the distance between two zones right here. So the distance between this supply zone and this demand zone is right here, 76 pips. Very simple criteria that I have when I'm trading, zones and ranges is when it comes to zones and ranges, I like to have a particular amount of pips per range. So for GJ, which is GBP, JPY, I like to see anywhere from 25 to 35 pips as the range, right? And the reason why it's 25 to 30 pips is because even though I'm not catching the full 25 to 35 pips, I still want to have a decent push just because it gives me room and it gives me cushion, right? Most of the time I'm usually going for 15 or even 20 pips, right? But let's just say if the range was literally small and you were trying to go for 15 pips and your range was literally only 15 pips, you would need basically the whole move in order to get your TP hit, right? For me, I don't like to enter in trades that don't have a range that are above 25 or 35 pips, because if it's at least 25 to 35 pips, I only need to be possibly just cover 50% of that range. And for that, it gives me a lot more confidence to enter it, that I don't need a big move to happen or a strong move to happen to be able to clear the whole range, right? So it's very important, for me and my psychology, that I have a certain number or certain amount of pips between zones, and that's kind of how I enter. So that's for GJ. So the other pair that I trade is gold, right? For gold, I like to have, anywhere from 35, plus pips, because at any point, it's just, there's not really much of a difference after about 35 pips, but the more the better, right? So for gold, I like to see anywhere above 35 plus pips. The reason for it being higher than GJ is just because of the fact that the spread and gold moves a lot more, violently, and also it just has bigger moves than GJ does, right? So that's part of the reason why I've created these numbers as the range pips that I want to see before entering a trade, and it's very important. We've figured out what zones and ranges are. Now what we're going to do is basically explain what we do with these zones and ranges, right? Once we have identified our supply and then our demand, what we do is you typically will see a supply or demand be just created from just like a consolidation, right? Boom, boom, boom. So we have something like this, right? So once we've identified our supply and demand, now we have this little consolidation zone being created right here, right? So we have this consolidation zone, I'll highlight it in green, and then we have our supply, and then we have our demand at these levels right here. After seeing this, what we want to do and how I trade is basically off of breakouts, right? Let's just say price breaks out this way. We have to identify where our next level of supply is right here, right? So if it breaks out to the upside, we have to look to the left, and what we want to see if we're looking for a supply is this last candle up. So these it's like a bullish candle, something like this you'll see on the left when you look to the left, and I show some real examples examples after this before the impulse push down, right? So before we see a big impulse push, we want to be able to identify this key candle right here, this level of supply. So once you've identified it, what I usually like to do is mark my supply level with the height of that, candle. So this candle is a little bit too big right now. So let's just make it a little bit smaller for example purposes. Yeah. So we wanna basically grab the height of that candle, and then that is our supply. And from there, we now know, okay, if it breaks these highs that were created right here at this original supply, now we got to look from one supply to the next supply, right? Because at the end of the day, how we think is if price does not reverse here and does not have enough momentum to keep continuing, it's now going to look for another area to possibly look for sellers at this point if we're going up, right? So we have to identify, is this range from here to here big enough? And remember, we refer back to our 25 to 35 pips. So for this range right here, we have 29 pips. This fits our criteria. Now that if price does end up breaking during like the London Open or the New York Open, now we can take some impulse trades off of a lower time frame like the 5-minute and then enter impulse trades off of this because our range is big enough, and we would try to take, for a 1-to-1 or 1-to-2 at this point. That's a valid, setup that we do have if we're trying to go for the upside. Now we're going to look for the downside, right? So the downside is essentially we look to the left again, and what we want to identify is basically the last candle down. It's the same thing, but just in the opposite direction, right? You want to look for the last candle down before the impulse push up, right? Before this big impulse push that we do see. These type of candles will always tell you where supply and demand is right here. So this last candle down is going to identify where this level of demand is. So we would highlight that level right there, and that would be our level of demand. And at that demand level, there are buyers waiting right here. And at that supply level, there are sellers waiting. So if we can break the support that was created, this consolidation, then all we're looking for is, does this range to this range, is it big enough? This is GJ right here, or let's just use this as gold as an example. Does this fit 35 plus pip? Yes, this is 69 pips, right? About 70 pips in total. This definitely fits our criteria. So if it does end up breaking, then we can look to enter this trade based off of that because we have confidence that the range is big enough. That's basically how I like to trade, because all it really is identifying your zones, which are supply and demand, and then figuring out if the range from zone to zone is big enough. So this supply zone to this next supply zone, is the range big enough for you to make it make sense to yourself to enter the trade? And the same thing from this demand zone to this demand zone, is the range big enough? It is very simple, and that's kind of how I like to really simplify on trading supply and demand aspect, right? So at the end of the day, it's really just simplifying trading by identifying your supply and demand and then identifying how big the range is and then kind of going from there, right? Because it always leads back to the basics, right? It's this little image, right? I always tell people price is going to do two things, right? One or two things, especially when it's on a downtrend, right? It's going to do this, push down, consolidate, push down, or it's going to push down, consolidate, and then reverse. It's that simple, right? And obviously people are thinking, no duh, yeah? Like obviously it's just going to go up or down, right? So that's the whole aspect. It's that simple, but we overcomplicate it. And where we want to always identify that little consolidation zone is basically when price does die in momentum. And then we start identifying. So these green boxes that I've circled is basically this green box that we were just looking at right here. And from there, we're either going to catch the push back down right here and then look to the left to identify our demand level, or we're going to catch the pushback up and look to the left to look for our supply level. And it's really that simple at the end of the day. What I'm going to do now is show you guys some examples.
And by the way, if you'd like to just trade live with Yuya in the morning and take the same trades that he's taking and be mentored by Yuya, then go to fundedtraderfasttrack.com.
So I'm going to be explaining a few examples on a GJ right here. And I love to trade GJ. I love to trade during the London session, is because there is a lot of movement during that session, right? So let's take this real live action, example that we do have. And I have these session breaks just to make it a lot more simpler. But right now I'm just going to turn it off, so it's just a lot cleaner. What I want to do is kind of explain, right? So right here, what we do have is, it's not the cleanest like range, right? But you can kind of just see after the impulse push up, there is a consolidation at this point, right? So remember that image that I did show you guys, right? Like how price is going to do one or two things. It's going to this, consolidate and continue up, or it's going to push up, consolidate, and reverse, right? So in this case right here, this example is probably this one right here, right? So it's one or two things. We had the impulse push up, but then we created this little consolidation, right? We created a consolidation like this, and from there we use the volume that London brings, and then essentially we use our zones and ranges strategy and then enter a trade off of that. So looking at this right here, we're basically gonna see, okay, when the London candle opens, we're gonna wait for that break, right? Or we're essentially, gonna identify where our supply and demand level is. So looking at this right now, if we were to enter off of the break of, like these lows or that exact low that we do have right here. And I don't want to get too technical about like certain numbers in GJ, but let's just use this as an example. So we do have that low of that consolidation zone that we do have, right? And what I mean by that consolidation zone is, I'm gonna draw it one more time, this aspect that we have right here, right? Because it's gonna do one or two things, but that consolidation zone right here, we have that low that is created. So from there, what we're gonna do is look to the left, right? What I do notice at the left is that there is a level of demand all right here. So it could be dangerous. What I always tell my, students is that if it already tapped into that level of demand and was not able to push up, we can disregard this level of demand and then go to the next one. So the next level of demand would be right here, right? Where, potential buyers could be waiting, right? So we would measure our range from here to here and see, is that range big enough? And we go back to what we said about GJ, right? We want to see anything above 25 pips. 25 to 35 pips is an ideal range. So for that reasons, we would then be like, okay, if price does break here, if we're looking at price right around this level, if price breaks here, then we would look on the 5 minute for an entry to possibly enter and then try to push it to this level of demand. So when we go to the 5 minute that we have right here, we have the 5 minute chart, and right, we're obviously trading during a high peak volume time during the London session. So we know there's a lot of volume on our side. So as soon as we start seeing this consolidation zone break, we've already identified our demand level in this case because we're looking for sells. If that level breaks, we already identified also our range is big enough. This is where we would enter in a short right here, a short position on a lower time frame. And then from there, these would be an impulse trade that you would take. You would grab the 5 minute candle that broke it, put the stops right above it, and then you would enter. I usually go for a 1-to-1, but sometimes a 1-to-2. But in this case right here, a 1-to-2 would have been hit right away. This is just one example of kind of like how I like to see, the markets in zones and ranges, because it all really just comes back down to that image that I explained right there, right? It's the push up, boom, and continue, or it's going to do something like this, the push up, consolidation, and then reverse, right? If we understand that the market only does those two things every single time, and that we can always just wait for one of the big moves to happen and then the consolidation, then we can react to exactly what the market is going to do. When we start trying to predict exactly, oh, it's going up or it's going down, that's where we start messing up and then creating bad habits. I do believe that if we can focus on just reacting and understanding that the market can only do one or two things, it'll make trading a lot more simpler for you guys to be able to execute on.
Hey, and if you found this helpful, then make sure you check out this other extremely helpful video that we recently filmed with Yuya.